Hello there, I hope that you are doing well. Welcome to this new lecture. Throughout this lecture I'm going to be outlining to you how I was able to short the top within a market maker sell model earlier this week. I got a lot of questions from my students with regards to how I was able to time the exact reversal and enter where I entered. In order to break down this lecture, I'm going to be allowing you to walk through my top process and watch me navigate the delivery. So here we are first of all on the daily time frame of Nasdaq, and what I want you to see is that first of all I'm outlining the daily CB right here, which was present. What I want you to see is that when it comes to how we opened up for the week, we saw the market open up and initially immediately repriced towards the upside. Now the moment that the market reached this daily CB, that is for me the moment in time where I begin looking at, okay, how are we going to deliver in this area? What I want you to see is that when we drop into the hourly time frame, what you can see is that we have bias liquidity resting above the previous day high, the Monday high right here. And next to that, what I want you to see is that I've outlined these relatively weak lows, which were present throughout the earlier stages of Tuesday. So what you can see is that we consolidated right here inside of the new week opening gap of this week. Then we saw the market quickly run towards the upside, reaching the daily CB. But what I want you to understand is that when it comes to this slow delivery followed by this quick delivery, what this actually is that this is the engineering of sales liquidity. These relatively weak lows get viewed at from a retail-minded perspective as, hey, that's a strong support zone, that's a strong support area, so to say. So retail-minded traders will look to go long on the market, they will look to buy the market and place their stop losses below these relatively weak lows. Hence why that is liquidity which I anticipate to be targeted later in the day. When is it going to be targeted? It's going to be targeted when we form the actual smart money reversal. Now when it comes to delivery on the 1 minute time frame then, what I want you to see is the following. What I want you to see is that at 10 AM we saw the market reprice into the daily CB, but notice that the market repriced lower afterwards without showing any signs of a smart money reversal present right here. Instead, we saw the market engineer bias liquidity above this high. We saw the market grind towards the daily CB once again, and we formed relative vehicle highs relative to this high. What I want you to see is that what I'm waiting for is the following. I'm waiting for the market to manipulate towards the upside, quickly run above these relative vehicle highs, and then show the signs of an SMR taking place. Now what I want you to understand is that when we look at this delivery as a whole, what you see is that throughout this delivery, where we saw the market slowly go back and forth, we quickly saw the market begin expanding higher at 9:30. So what I want you to understand is that from 9:30 onwards, the majority of traders will look at this delivery higher through the perspective of, hey, we need to be long, we need to be buying the market, the regular trading hours are going to be bullish. But keep in mind the higher time frame analysis in play. We know that there's sales liquidity which has been engineered, we know that retail-minded traders are being trapped. All that we need to wait for is for the time to be right for that actual SMR to take place. Hence why you see me wait right here as the market is just consolidating. What I'm waiting for is I'm waiting for the open of the new 30-minute cycle at 10:30, and I'm looking for a very specific window of time to be utilized for manipulation. So what you can see is that I've outlined this bias liquidity pool right here, and next to that I've outlined this sales liquidity pool right here on the low. This low is the low which formed shortly after the 9:30 AM open. So what I want you to understand is that the same concept which I outlined to you on the hourly time frame with regards to those relative weak lows is actually in play right here, where you see the market having consolidated and hence why there is sales liquidity engineered below these lows right here. And if you look at these lows, do you see how there's also this very clear uptrend right here present? You can draw a trend line perfectly there, and every single retail-minded trader will look at that from the perspective of, hey, this is an uptrend, we should be long, we should be buying the market, we should be going out there and going long on Nasdaq. But in reality, what this is doing is it actually engineering sales liquidity, which smart money requires. So the moment 10:30 opens up, my eye is drawn to one thing. My eye is drawn to monitoring the reaction to this high right here. The reason why is due to the following. What I want you to understand is that what I'm outlining here is literally A to B. I've outlined the buy side liquidity pool, I've outlined the sell side liquidity pools, one right here and the next one right here. And all that I'm waiting for is I'm waiting to see if we are in fact going to see the signs of a smart money reversal taking place inside of the daily CB above these highs right here. So when we pay attention to what happens at 10:30, what I want you to see is that 10:30 initially drops lower, and you might think to yourself, oh, this is a sign to go short, it's going to run, this and that. But I want you to understand that I'm waiting. I'm waiting for the buy program to be done. And until we take out this high, the buy program will not be done. So you can see that we initially have 10:30 drop lower, but I don't look at that from a sign of, oh, I should be long. No, I have a very clear analysis where I'm anticipating a swing high to form. So what you can see is that the market is slowly grinding towards the upside, and then all of a sudden it begins to accelerate right here. Now pay close attention for a moment to time. Do you see at what time the market is beginning to expand towards the upside right here? Look at the bottom right of my screen. Do you see that this is happening at 10:33? Think about that for a moment. Why oh why are those minutes so important? See the market quickly rip higher, taking out this buy side liquidity pool, and from that moment in time, what I want you to see is that the SMT detector right here is signaling a 30-minute SMT between Nasdaq and NTS and Nasdaq and the Dow Jones. The moment that we see the market reject this high and displace towards the downside, that right there shows to me that from that moment in time we can look to participate in the sell program. Why? Because what I want you to understand is that the real change in the state of delivery is taking place right here. The moment that we see this absolute SMR form at 10:33 a.m. 1 hour after the open of the regular trading hours. This upclose candle right here becomes our bearish order block, and in that we look to fill or short orders, because that is exactly where high frequency trading algorithms are positioning themselves short. We see the market beautifully expand towards the downside, and you see me outline big downclose candles incoming. What that means is that we're going to see the market begin expanding and ripping towards the downside soon. Notice that a CB formed right here, so if you did not fill your short orders yet inside this upclose candle, the next opportunity would be inside this CB right here. Now what I want you to see is that the SMT detector is signaling a SMT right here on the lows between Nasdaq and ES. But what I want you to understand is that this SMT by itself means absolutely nothing. It does not mean, oh, we're going to look to go long all of a sudden. No, what it does mean is that Nasdaq needs to catch up to ES. So the moment that we see Nasdaq trade below this low right here, from that moment in time, it gets confirmed, yes, we are in fact going to roll over aggressively. Now, do you see as well that when we pay attention to this delivery, and this is something which I want you to investigate more and more if you haven't yet, do you see that what is actually happening here is that imbalances which form throughout this repricing higher will get referred to on the right side of the curve? The reason why price is having such a hard time with this area right here is because when you look to the left right here, you will see this very large imbalance. If we extend that to the right, what I want you to understand is that the moment we displace below that, that imbalance can get utilized as what? As a true inversion for value gap. We see the market eventually reprice below this low, confirming, yes, we are in fact going to roll over, and we're going to see the indices rip lower. Now from this moment in time, what we need to see is we need to see the market reject this BC, which I've extended to the right here by outlining this blue shaded box. And the reason why is because that right there shows that it is functioning as a real inversion for value gap, and it would signal further continuation towards the downside. Now, what is important to understand is that when it comes to the current environment which we are in, what I want you to understand, and one more thing which I want to clarify right here. Do you see BC, low, and do you see what formed as we displaced through that low? I didn't annotate it, but look closely. For those of you that have been studying my content for a while, you will know that this right here is the Zeussy market structure shift pattern. So again, if you were not short yet, this right here provided another opportunity to align yourself with the underlying bearish order flow in play. Now, what I want you to understand is that when it comes to the current environment which we're in, there's a lot of manual intervention taking place. I'm not going to be touching on what is currently taking place in the world. I'm sure you all know it. But with every single news release that takes place or every single announcement which gets made, there's always a lot of manipulation taking place. So hence why you want to partial aggressively. The moment that I saw Nasdaq repriced into this lower imbalance right here, which we didn't trade into yet, that right there was a potential partial. Reason being is because the Dow Jones, as the S&P detector is signaling right here, was already taking out key time-based lows. So hence why those correction correlations are signs to partial aggressively. Now, what I want you to understand is that when it comes to taking partials, a lot of you might think that taking partials is a bad thing. But I actually believe that taking partials is one of the most important things to do when you are aware of the environment that you're trading in. Because the worst thing that can happen is you being in a wildly profitable trade, you're up a lot of points, and all of a sudden the market comes back all the way towards break even though you see warning signs being in play. And hence why you see me partial aggressively, where you see me take something off the table again and again as prices repricing lower into my objectives and the S&P detector is signaling to me warning signs. Now notice that the market repriced below the sell side liquidity pool of the 930 low right here, and that was again a beautiful moment to take something off. Now from this moment in time, what I'm monitoring is the following. What I'm monitoring is whether or not the price is going to stay below the imbalance, which I've outlined right here with this blue shaded box. As long as price stays below that imbalance, what that signals is that we are still clearly in the sell program. The moment that price would displace above that imbalance, from that moment in time it would be questionable whether or not we are in fact going to continue expanding lower. So hence where on my Telegram channel I was outlining to you, guys, make sure you take something off the table, make sure that you aggressively partial in this environment because you don't want to overstay your welcome. And what you eventually see taking place is that at that 930 low, we actually formed a low and the market displaced above the imbalance right here, which I've outlined. And from that moment in time, what you can see taking place is that the market is in fact repricing towards the upside and will eventually reprice towards new day highs. So what I want you to understand is that even when you are not aligned with the actual daily analysis as it's coded to deliver, you can still make money when you recognize at what moment in time there will be a specific program, whether it be buy or sell program, as in this case. So hence why I want you to understand that at the end of the day, your goal is not to go out there and capture the full day range. Surely some of you might have that aspiration of you wanting to trade every single day range, every single day, but let me tell you something. At the end of the day, learn to be content with enough. Learn to be okay with just participating in A to B, taking partials accordingly, and making sure that at the end of the day, you take the trade which was the most logical to you. Because let me tell you something. Students of mine participated inside of this swing lower formation and they rode the market up towards the upside. But yet I took the short right here. So what I want you to understand is that if you understand these time and price concepts correctly, you'll see a lot of opportunities. That does not mean you need to participate in every opportunity. That does not mean that you need to go out there and participate in every single minor price swing. No, the only thing it means is that you need to take the setup which you deem highest probable, which you find the most alignment in, and learn to be content with that. And to me as a mentor, it's one of the most fulfilling things when I see me participating in a sell program like this, and where I exit, my students look to buy. That means that I literally hand over the market to them. I make my money on the right lower, and they make their money on the right higher. I hope that you found this breakdown insightful. I think it is very beneficial for you to listen to my thought process, to listen to what I actually am paying attention to in that moment in time. And I believe that if you study in great detail every single micro thing which I mentioned throughout this lecture, your perspective on algorithmic price delivery is going to be changed to it. And you're going to be seeing things that you didn't see prior. And it's going to be one of the most fulfilling moments in your journey because you're going to experience these major light bulb moments. And those should be journaled and those should be studied in depth. So I want to thank you for watching this lecture all the way to the end. I want to wish you a very happy Easter and I look forward to speaking to you soon again. Be safe.